episode of Talk of Town. We are here under the series Beyond Boundaries, discussing market insights. This is our regular episode on market wrap for the week recently concluded. As usual, I have with me Mr. Prabhanjan Rao, representing Elysian Advisory, SEBI registered investment advisor, and Ashwin Kumar, a director of DA Capital. Hi, gentlemen. Hope you're doing good.
Good morning, Ellen. Good morning, Ashwin. So, as always, very sunny morning here. Yesterday, it was like, it touched almost 48 to 50 in Dubai. So,
Okay.
Okay, at least the temperature is looking more interesting than the markets recently concluded.
absolutely
So,
true. Absolutely true.
so if there was somebody who had gone on a vacation as compared to our previous week's episode, I believe he or she would have not missed anything in the markets. Looking at the weekly,
Absolutely.
closing, right? Absolutely subdued week as far as both U.S. markets and Indian markets are concerned. But as usual, let's get started with the global factors, fundamentals. So over to you, Prabhanjanji.
Thank you, Ellen. As always, let me just touch upon the main parameters, how the entire week fled, because these are the parameters where we always, touch upon. The crude is about $69. I mean, there's no much of an activity. It was $67 per last week, and dollar index is hovering around 97, well below 100 mark. The CBOE index is 16.84, which is almost the same. And India VIX, I'm so surprised seeing the India VIX to be around 11.5 to 11.8, which is, I always say anything below 14 is very good. But there is a lot of underlying currents. I mean, that's what I can always see. The 10-year GSEC yields is around 4.35. Last week it was 4.27 because of the inflation numbers and all that. It has inched on a higher side. The 30-year yield is about 4.686. More or less, it's on the same levels. Look at what Bitcoin has done. I mean, 117,800 USD. You know, so that is scaling new heights. Like Dubai is scorching heat. So these are the parameters, and as you rightly mentioned, it is pretty subdued, pretty much on the same lines except the Bitcoin. And of course, there are so many events that has happened in big markets like in the United States, China, Japan. So let me just give a brief about the United States. Nothing much as such, but the equity markets, ironically, are gaining remaining. I mean, they are regaining the strength. The S&P 500 and Nasdaq hit all-time all-time highs last week with record-setting gains, led by the mega cap tech names like the Nvidias, the Microsoft, the Meta, Amazon, and another company called Broadcom. So these account for 50% of the S&Ps. So that means 5% rebound since early June. Of
Yeah.
course, the tariffs are making headlines again. They are creating volatility, and the new proposed tariffs is the 35% on the Canadian imports, 25 to 30%, 50% on the Japan, Korea, pharmaceutical, copper, and Brazil. They also shoot the sentiment. Despite this, the markets largely held firm, though futures dipped about half a percentage, on Friday. The labor market remains solid. The June non-farm payrolls added 147 jobs versus 118. The reason why I'm bringing all this to the light is, though there is tariff headlines which are creating volatility, there are certain numbers like the labor market numbers or the bond and dollar dynamics. They are holding the market. They are making the market high, though there is a rough 10% slide in the dollar index in US. Interesting thing, another that has flared in the last week is China. The banking stocks in the China and the solar stocks, they are really dancing in China. These Chinese state-owned banks rallied and rallied not to extent of 10 15%. There, for example, China Construction Bank, which I was watching, uh, they have rallied 36%. And you take any of the big market names, they have rallied between 36 to 30, 30 to 36%.
Wow.
Similarly, the solar stars, after the Beijing step, that is completely a state-owned, state intervention. After the state intervention, the solar stocks jumped by almost 10% in one day. So they are up by between 15 and 20% in July. What is the bottom line there is they are moderate on a upward trend. They are picking up now. They are picking up the momentum.
Right.
Um, Coming to the Japan, this is where the underlying currents we all they are shaping up, and I always feel uh, Japan is what is going to shape up the global markets in the next 2 to 3 months. The Nikkei held steady, but it lacks the bullish momentum. And there is something like political uncertainty that is looming in Japan, and the selected earnings for the companies, they are muted and they have missed the capped gains. That's what is happening in Japan. And in Germany, again, Germany is more or less is directly proportional to what US is. You know, the trade tensions always impact the the Germany. The concerns over U.S. trade policies and the blocked tariff talks have weighed on Europe. On European equities. Mm. And interesting thing is, many of the European Union officials warned that they would retaliate. So these are the things like where your words against my words is where shaping of the European markets. So with all this, what are the implications for the investors? There is a tech-led rally in the US, heavy concentration in the mega caps, which is also a lot of relation in Indian markets, which I will talk when we discuss the Indian markets. Rotation into the defensive and the yield is playing a lot in the global economy. Again, whatever it said and done, US is the mother of all the markets, and trade policy from the US is the king. Of course, we shouldn't ignore the local dynamics. Japan's political climate and Germany's EU posture are also will also shape up the next 2 to 3 weeks, or maybe I would say a month's regional investor sentiment. So this is about my views on the global developments.
Excellent, excellent. I just have a input here. So, whenever there is certain uncertainty looming across different markets, I think that is where you as advisors play a major role, right, in
Right.
guiding the investors in the right way.
Absolutely.
With this statement, we'll just have a quick technical outlook from Ashwin on the global markets. Over to you, Ashwin.
Thanks, Ellen. So, what do I say about something that has been trading at lifetime highs for the past couple of weeks? I'm particularly talking about S&P 500. So, I think the week that ended on June 23rd is wherein it closed at a new lifetime high, and consequently, 3 weeks we have a new all-time high closing for S&P 500, and that in itself is a statement. Of something that is very very strong. But what concerns me there is the fact that only a particular sector or a handful of sectors have rallied S&P 500, and it's not the entire broad market rally. And that is something I'm always concerned about. Whenever there is never a broad market rally and only a few handful of sectors rallying, at some point in time they will hit their peak, or they'll start getting exhausted, and that's where it starts spilling over, unless some other sector tries to hold the weight. Eventually it's going to correct. But for the next 1 week to 10 days, because we are only talking about it, I think I do not see any concerns in the S&P 500, except for the fact that a few stocks that have led the rally are making their cyclical top, if not for a longer term, at least for the intermediate term. So that's predominantly with respect to S&P 500. Then coming to crude, again a very muted week for crude. Gold and silver, on a personal note, how I've been tracking silver for a very, very long time. And I was glad that, I was a little disappointed that it was not a great week for silver until yesterday, where it rallied about 3.5%, 4%. And then you had gold, which closed by about close to 1% for the week. And silver, I think, is about 3.5%. So, very good week for both the big metals. So, expecting the rally and the momentum to continue for the next week as well.
Great, great. So I think we've had a very good insights on the global front. So coming to Indian markets, Prabhajanji, over to you for the fundamentals in the Indian markets.
You see, Indian markets, if we see for the last 1 year or so, they are not giving any free lunches anymore. It's asking you to dig deeper into the earnings quality, the regulatory tone, and the leadership signals. Gone are those markets where immediately after COVID, you touch a post, then it gives you returns, minimum returns, more than a fixed deposits. No, they've gone off those days. If you play smart, the next month could offer you strong entries, but the lazy money, the passive bets will get punished. So you need to little work harder to make money in these markets. So it is a stock pickets market, and and of course the Indians market just got shaken by the SEBI's Jane Street ban. The volumes dropped. Exchange stocks took a great hit, but I personally feel these are the times where those are the stocks where you need to see the fundamentals and then do the stock picking. Where I personally feel they can rebound in 4 to 6 weeks when the dust settles. Again, a disclaimer that we don't hold any stocks in these entities. Um, so when you talk about the sectorial plays, like I would like to talk about this since this is an earning season. Let us talk about the informational technology, the sector, how it has flared. Whilst US has hit the tech sector, and the US tech rallied and it went to all time high. Look at the IT sector in India. There was a weakness across the board. If you talk about TCS, they have posted lower than expected Q1 revenue, dragging the Nifty down by 1 to 1.5%. So when the big techies, gives a guidance like this, imagine how the mid cap sector, barring few names like mid cap IT names like will flare. So the second is the defense. Profit booking, continued in defense, which had a multi month rally. But I feel there is the rally has not fizzled out, but we you know this sector should give a decent returns in the short term, provided all the parameters are ticked. Coming to other two sectors like FMCG and pharma, let me talk about pharma. Barring Glenmark, the pharma also was very muted. Glenmark, jumped a 10% on a licensing deal, but otherwise it had a muted, performance. Similarly, FMCG, that was the sector which outshined. You see the big names like Hindustan Unilever surged about 4% after announcing a new CEO, helping to boost this, help to boost this sector. Now, coming to the oil and gas thing, like they are driven by the stocks like Bharat Petroleum and some of the IOCL names, but I still feel it has got a direct impact on the crude, how it flares. And the IPO activity. You should, if you talk about the IPO, India is on a pace for a record IPO year. I mean, if I talk about the statistics, 6.7 billion so far in 2025, and there is also a strong second half looking outlook backed by the RBI rate policies and household savings. So I think this should shape up the sector, and all the sectors, especially the banking, the NBFC sector. So, if you ask me in a very quick nutshell, where should you park your funds next week to 1 month? I would always say, if you want to play very safe and defensive, FMCG and the pharma innovators are there. And if you want to avoid, or I would always advise the reduce in a very short term period is broad IT until the guidance is given out quickly by the big names. Um, I think this is what we feel the outlook for the next 2 weeks to a month or so.
Great. In fact, two major takeaways from what you mentioned. One is, you are bang on as far as the IT stocks are concerned. It's not surprising because even the large mutual fund asset management companies are not holding huge quantum of IT stocks in the portfolio, right? The exposure to IT stocks in some of the best performing schemes is less than 5% today. So that is
Good.
where we are as far as IT is concerned. Completely agree with you. And the first point that you mentioned, right? So I think the best word to use is exercise. So exercise your money, right? So
Exactly.
over to you, Ashwin, for your inputs on the technical side.
So I thought we'll do a little different here this week, and instead of talking just about the numbers, I thought I'll just pull up a chart of the open interest of Nifty, how it has changed, as well as the Nifty index and Bank Nifty, just to give you an overall perspective of the markets. And Prabhanjan, when you said if somebody is wondering where to park their money for the next 1 week to 1 month, I think if it were Lakshmi, he would say park it in liquid funds and take home, a fixed return and not invest into the market. So anyway, on a serious note, I'll be moving to the charts. Give me a minute. I'll share the screen. Okay, I'm sharing the entire screen. So is the image visible, gentlemen?
Yes, yes, yes.
Okay, so last week, Lakshmi, I never, cease to be surprised or, feel happy about how options data do give an indication well in advance. We spoke about how 25 250 was the support on the downside, and how 26,000 had a very high call option volume selling, and we fixed that range. And until Thursday, because what we get options is not until Fridays, the expiry is on Thursday, how the market did not breach the 25 250 until Thursday, and then kind of gave it up. So now what you're seeing on the screen is a shift in the put and call volume. While I say that 26 is still a major resistance, on the downside, the strike prices are slowly shifting. So we have a major support at 24 950. You see the spike in put option volumes. Apart from that, what is also interesting is that two major increase in open interest in the strike prices between 25 200 to 25 400. So it is kind of telling you the range is going to be somewhere between 24 950, 24 900 to about 25 300 to 25 400 on the upside for the next 1 week to trend trading sessions. What is also interesting here is to complement this, I have taken a 75-minute chart of Nifty, and I've marked a trend line here of two major supports in the recent past. And what you're also seeing is that the 24 950 mark is coming to around the level wherein this trend line is going to kind of uh, interfere with the price action, or kind of going to the point where then the price and the trend line are going to meet. Now, that kind of tells you that 25,000 to 24,950 is a major support. But having said that, one word of caution, if this trend line is breached on the downside, we might see some additional selling pressure coming into the market, and that is where we'll have to be extra cautious. Why I insist on this is the fact that 24 950 looks like a major support from the open interest side as well as on the charts. There is a tendency for investors to suddenly go and start selling naked puts or start buying Nifty when it comes to 24 950. When you do that, market always surprises you if there's a gap down or if there's a sudden selling volume. What happens if it breaches 24 950? We are suddenly left exposed, and that is where we'll have to exercise a lot of caution of not trying to take extravagant positions around this level. While we can expect some recovery from this level, I am not saying that we have to suddenly start going heavily bullish at around 25,000 or 24 950. That's a word of caution that I want to put across to all the viewers. And coming to Bank Nifty, you have almost like a ending diagonal pattern, if I can put it in a very technical term, as well as it is also reflecting what the big boy Nifty is doing. But it's just that it is closer to the trend line as compared to Nifty. So if there is a breach in trend line, while I expect and anticipate that this level will hold for another upside move, if this level is breached, then Bank Nifty once again is going to come under severe selling pressure. So that's a word of caution. In a nutshell, I am not too hopeful of a major movement in the market for next 1 week to 10 days. It is going to be range bound unless and of course there is some extreme volatility coming into the market based on whatever news inflows at that point in time, and either of these upside channel or the downside channel gets breached. So until then, I anticipate the next week too is going to be a little subdued for both Nifty and Bank Nifty, Lakshmi.
All right, interesting inputs, and we could see that the options data kind of backing the levels on Nifty and Bank Nifty straight away, and the inputs are to be taken purely for educative purposes. As usual, our usual disclaimer: none of the points that we have been discussing here constitute investment advice. Please do consult your financial planner before initiating any sort of investments. We'll see you around in a week's time from now. Until then, take care. Bye bye.
Bye bye. Thank you.